Welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy, and this is it, isn't it? This is the last time we'll be together before the close, so let's make sure that we've got a keen eye on everything. We'll make sure you also need to know anything if we see something awry. But let's start with the corn table and see how that looks going into the close today. That's a quiet board, isn't it? I mean, we've got a mixed market there. Deese is off a half cent at 5.32 1/4. March is up 1/4 cent at 5.40 3/4. So very little going on there. They're very small changes out the curve there. The deferred's only off or up 3/4 penny or off 3/4 penny. So not a lot happening over in that corn table. Let me take a look at soybeans. They're coming off their highs, but they're still up okay. 8 cents higher in that no bean contract at 12.29 1/2. We've got Jan up 9.5 cents at 12.38 1/2 as well. So we'll keep an eye on that, but that looks pretty good. How about the Chicago wheat market? Chicago wheat's, well, there we go. We've got something there for everyone. Deese is up a half at 7.36 3/4. March is up 1/4, 7.49 even. May is sharply unchanged at 7.52 1/2, and we've got the deferreds off just a tick or two. So something there for everybody in that Chicago wheat contract. How about hard red wheat in Kansas City? That's off 1.5 cents in the front month at December at 7.47 1/2, and 2 cents lower in March at 7.54 even. Let's take a look at Minneapolis while we're at it. Take the hard red, the spring wheat, in Minneapolis. December up 7 cents at 9.74 3/4, while March is up 6 3/4 cents at 9.61 3/4. And lastly, this one has been all over the shop. That's the cotton market, up 93 points at 107.97. But we've had a 3 cent range on the day, basically. So still some decent volatility. All right, let's bring in Ted Seifried from Zaner Ag Hedge to see if he can make sense of all of this for us and kind of hold our hand through these closing prices. Ted, do you see anything there that catches your eye?
I mean, it's the soybeans, Scott. Soybeans finding a fair amount of strength, and that's really coming on the back of soybean meal. Maybe soybean meal has just found a low. There's a lot of demand for feedstocks. I'm a little surprised that soybean meal is as cheap as it is, and I think there is a bit of upside potential. So, as you know, as we've talked about, I think this is the time frame where we can see a bit of a recovery in these markets, post-harvest rally, so to speak, based on the idea that most of the cash pressure is probably behind us at this point for now, or at least the heavy cash pressure is probably behind us for now. We still got to grow this South American crop. And if they have any problems, our 320 million bushel carryover in soybeans can evaporate very quickly. So there is still risk in this market. And, we're still in an inflationary climate, in my opinion. So, again, I'm encouraging this recovery. I like seeing what we're seeing. For corn, unchanged day, but hey, we're holding the strength from yesterday. So that's a good sign for me. Corn chart looks like it wants to break out over the 50-day moving average. We're reluctant to do it on the first try that we've had in a little while, but give it a couple days, and as long as we don't have a bigger pullback, I think that looks pretty good, and I think wheat looks pretty good too. So really everything's just kind of moving past that major harvest pressure and into the time frame where we're adding a little bit of risk in for the South American crop.
How much are you talking about input prices with your customers right now?
Yeah, I mean, that was a huge topic of conversation on a TV show I did over the weekend. And that is something that we've been talking about a lot for the last few months. We've been pretty aggressive on hedging natural gas, hedging diesel. But if you haven't done that and you're sitting there right now, I think you kind of have to wait. Natural gas has come off its highs really very well. Hopefully that'll filter down to input costs. The question is when, though? Does it happen before spring planting? And, everybody's talking about a big shift towards bean acres. I do think we will see a bit of a shift towards bean acres if things stay the way they are. I don't know about a big one, though. I'm still thinking we'll get about 90 million acres of corn next year. Either way, you got to take a pretty close look at that new crop bean contract if you're going to be planting more beans. Right. Because if you're planting more beans, because of these prices, you have to protect these prices.
Right. And also, is there 90 million acres of fertilizer out there for the corn? Who knows? I mean, there's so many things that are going to be up in the air. All right, stay right there. I know you're not going to go anywhere, but we're going to go away, pay some bills, come back and talk with Ted Seifried from Zaner Ag Hedge about the livestock market after these messages. Welcome back to Market Day Report. I'm Scott Shelby. This is the last time we're going to get together to talk about these live cattle. Going into the close here, we got about 10 minutes left, so let's take a look at that live cattle board to see if we've got anything happening there. And it's been kind of quiet here. We've got that Deese contract off 40 cents at 130.02, and February's off 2 cents at 134.97. How about feeder cattle? Let's take a look and see if we've got anything happening over there. And again, that's rolled over a little easy here. November's off 70 cents at 158.65. Jan's off 62 cents at 158.92. All right, and then lastly, let's take a look at lean hogs. They're lower in the day here. We've got that December contract off $1.17 at 77.57, and we've got the Feb contract off $1.15 at 80.62. All right, let's bring back in Ted Seifried from Zaner Ag Hedge. Thanks for staying with us here. Ted, what do you think about the lean hogs or the cattle? What tickles your fancy back there?
Yeah, well, when you let off the segment with talking about things that have gone awry, let's talk about the hogs. We had a really nice reversal higher day yesterday. It looked really good to see some follow through today, and we haven't seen it. So that's more than just a little bit disappointing. Fundamentally, I think with the lack of animals that we have out there, with the domestic demand being strong, with export demand being fairly strong, I think there's upside potential for the hogs. I think minimally we should see that these contract get up to levels where the October was trading in the low to mid 90s, but it's just not happening. So that's frustrating. Same thing with cattle, extremely frustrating. I mean, we are just stuck in this range with fat cattle between 130 and 140, basically, and we just keep going sideways. I have a lot of reasons why I think cattle can and should go higher, but then cash doesn't go higher. So then we're just kind of stuck here. So it's frustrating. I want to be optimistic. I want to be optimistic on inflation. Inflation seems to be affecting all commodities except for livestock, apparently. So, yeah, I don't know. Like I said, sideways and frustrating.
Well, I mean, we are definitely seeing inflation, and you're right. It's been a little bit immune when it comes to the cattle complex. What could ruin the party here? You have 20 seconds about what you'd worry about the most when it comes to the cattle.
I mean, we always got to worry about demand. Something happens. More shutdowns wouldn't do it. We saw that didn't happen. They'll go to the grocery store and we actually stock up. It'd be something happening with the stock market or just, macroeconomically.
All righty. Well, that's great stuff. I really appreciate it, Ted. You're always a good analyst to have on the show. That's Ted Seifried from Zaner Ag Hedge. He's in Chicago. We're in Nashville, and I'm going to hand this back over to Tammy.